Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati, and the rupee has fallen close to almost record lows today, almost touching rupees 77 to the dollar before clawing back some of its losses as RBI looks to have stepped in to stem the fall. And just when everything was seeming very good for the Indian rupee, with foreign exchange reserves at record lows, the economy doing very well. One of the few countries where inflation was, at least on the forecast level, was not very high. In fact, India inflation at at close to 5% or even 6% is less than what the US inflation is at 7.5%. And Indian 10-year gsec yield is at close to 7% levels. Today it's gone up while the US Treasury yield is at 1.74%, has come down, which is surprising given that India seems to be in a much better position. But the fact that the rupee is still showing vulnerability, and despite our strength, does show that there are limitations. Now, with foreign institutional investors selling almost about $12.5 billion of equities this year, while and the crude oil prices touching going close to record highs on the Russia-Ukraine conflict, and with risk aversion globally, there is a tendency to sell all emerging market currencies. And RBI is one of the few central banks who are still maintaining accommodative stance and not raising rates, while global central banks are raising rates. And this should actually have shown confidence in the rupee, but the markets are not showing that confidence. So this clearly shows that we still have a long way to go for keeping the rupee strong, at least in the eyes of global investors. On the macro fundamentals, the country is looking strong, except for oil. And in relation to even the most developed economies. But having said that, maybe the RBI needs to be more proactive in raising interest rates to stem the flow of rupee, just to nurse global investor sentiments that the central bank is on top of what's happening in the crisis times and on top of inflation. In other news, that Cholamandalam Investment and Finance, the South Indian strong NBFC, has raised 10-year perpetual bond with a 10-year call option perpetual bond at 9.10% for a small amount, just for rupees 25 crores, which is pricing is pretty much fair, or maybe, but given that gsec yields have been rising, then there could be reluctance by investors to invest in long-term bonds. Do not forget to download our app, Quick Invest for INR bonds, where you get the best bonds available for you to invest in this current market times where interest rates are rising, global risk is the huge amount of uncertainty, and the rupee is falling to record lows. And we have the best bonds available for you, where you navigate the current crisis and also earn decent returns with our own proprietary risk management scores, etc. All you need to do is download the app, check the bonds, and go through a seamless investment process. Thank you for listening in, and do subscribe to our YouTube channel if you've not done so already, and hit the like button if you enjoyed the bond bites.